See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think this is again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now. The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm.
With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And given the way how the volatility in the markets has only gone ahead and increased, how can retail investors actually protect their wealth? Mr. Prabhakar, what are the steps, what is the strategy that one should use in order to protect their wealth, given that there is a volatility in the system and it's definitely going to perturb the investors?
We need to live with volatility. It has been there for a very long time. So it is not that, but we need to be in growth companies. That is more important. Next 5 years or 10 years, what is that, the management or the industry is growing is very important. In few sectors, we need to understand the cycles. For example, if it is commodity led, like metals, it has a cycle. When the down cycle is there, we need to slowly accumulate. When up cycle is there, we need to regularly book profit. So everything is about cycles also. And there are companies which are expanding. So if you have 3 to 5 years view, now most of the chemical companies have started to expand. Now today also Gujarat Alkali Chemical, there one of the unit has come on stream. So this year maybe the revenue will not move higher. But next year, the revenue jump will be huge in few chemical companies. So we need to do our homework, and we need to buy companies which generate free cash flow. That is more important. People mostly look at price to buy. It is only growth we need to buy. So, and if they can do simple calculation, what is the last 5 years, or 10 years ROE, and then if it is above 12%, if they can start accumulating those stocks at a attractive valuation, then they will do very good over a period of time.
So volatility is here to stay, nothing to get panicked about, but the fact being that you need to be in quality growth related stocks and not buy any stock at any price, and that means that you should actually avoid even penny stocks, isn't it, Kunal? It doesn't make sense to, like the way how Mr. Prabhakar said, penny stocks should be avoided, isn't it, given the fact that in this volatility, that is definitely not the buffer that you can rely on.
Well, absolutely. I think in any kind of a market, it makes a lot of sense to stick with quality. So it's like, when when we have a simple analogy, like when you're playing a 50-over match in an ODI cricket, you can't be hitting sixes on every ball. Somewhere down the line, you're going to lose your wicket. So that same analogy, goes into the penny stocks as well. You can't be expecting that for all market conditions, for, every kind of a phase of the markets, that you have to be invested into penny stocks. It makes a lot of sense to stick with quality. You have to ensure that you last the entire 50 overs, and that's where we try and capitalize maximum trends. So same goes with the case that you have to ensure that you stick with quality and ride out the larger trend. That's where bigger wealth and profits generally gets made.
Alright, so that is like a sound advice coming in from both of our experts, and with that, let's kickstart with the queries. And this is the show that we address all your stock related queries. In case you are wanting to invest in a particular account, or if you've already invested in it, write into us. We are live on Twitter, Facebook, as well as on YouTube. You can also log in or write to us on the WhatsApp number that's flashing on the top of your screen. Do mention the name of the stock that you're looking to invest in or already are invested in. Do mention the price at which you've purchased the stock and the quantity as well, and if you're looking for a long-term or short-term horizon. But do remember that our experts will not be able to advise you on penny stocks, because you've heard both the views coming in from our experts. So let me get going with this one. And the first query that I have is coming in from Krish. He's writing to us from Chennai, and this one is for you, Mr. Prabhakar. He's asked me to ask this question to you. So he's saying that he's holding about 150 shares of Asian Paints at an average price of 2,700 rupees per share. He's saying it's one of the nifty superstars that he has in his portfolio, but he wants to know whether he should go ahead and book partial profits from Asian Paints and look to invest in Reliance Industries instead.
I think I will go with Asian Paints. You have to understand crude prices have come down. So now after going through a very difficult period in the last 3-4 quarters, now the margin expansion game will start to play. So I think I will hold on to Asian Paints, wait for 1 or 2 quarters more to see how it pans out. Then I will shift. I think Asian Paints will be my top pick.
Right. Coming to you now, Kunal. Ajay is writing to us. He's asking for a technical view on and a good entry point for Godrej Property with a 6-month view.
See, I think current levels is good enough for Godrej Properties. I understand that the stock has gone through a sharp correction over the last many days from 1400 to 1100, but somewhere down the line, I believe that the stock is getting into very deep oversold territories of price action for itself. That's why I believe that at current levels, it makes a lot of sense to buy the stock.
All right. This next query that I have is coming in from, I don't have the viewer's name, though he's asked me about Colgate. He's saying that he's purchased Colgate at 1,770 rupees per share. He wants to know whether he should hold it or look to switch to ITC. And if ITC, Kunal, then what should be the entry price?
So I think both these stocks are attractive. ITC, I understand that it's a recent price action over the last 7-8 months, which has attracted the stock price and a lot of investors. But then I think both these stocks, they have a tendency of going into slow, steady, gradual phases of uptrend for themselves. So if you're in from a long-term play, then I think both these stocks are attractive. You can prefer ITC because the stock has just given a breakout on the long-term charts very recently. So possibly the stock can stand to outperform, by a thin margin, most of the other peers. But I think both these stocks on a net-to-net basis looks to be quite quality.
Right. Let me just mark the flashes that we are seeing actually on the bottom of the screen, and the fact that Delhi High Court has granted statutory bail to Chitra Ramakrishna in the NSE co-location case, and also a statutory bail is being granted to Anand Subramanian. And Delhi High Court has also gone ahead and issued a notice to ED as well on this particular development. But let me bring on board the next query. Or Adiraj, do you want to go ahead with it?
This one, Now, Suprema Pal is writing to us and she's told me to ask you, especially this to you, Kunal, Graphite India share pick, asking when it will go up.
Well, it's very, very difficult to expect that stocks like graphite could probably do very well in tough market conditions. So graphite is a stock which typically tends to do well in the second half of the market rally or a market trend. So right now we are still juggling at a point where global data points, the domestic data points are still not extremely favorable for our market. So I think in that scenario, it's very difficult to expect stocks like graphite, HEG, which can do pretty well for themselves. My sense is that these stocks would remain under pressure, under consolidation, as well as under selling pressure, at least for the near to medium term, till the time you don't see the overall global markets as well as our markets getting into a rally phase. So if you're looking to buy, I would suggest an avoid.
Okay, this one is coming in from Raghu, and this one also is coming your way, Kunal, because he's written to you on Tata Power, 125 shares that he's purchased at 237 rupees per share. Sorry, this ideally is for Mr. Prabhakar because he's looking at this for a long-term investment opportunity. He wants to know whether he should look to average at current levels, and how does Tata Power look to you, Mr. Prabhakar, as a whole?
Is something, and after a very long time it was re-rated. And government policy is also very supportive. And the EPC contract, they have about 13,000 crore in the EPC segment of solar. So I think, for a long-term investor, one should not worry about Tata Power. I think in next 5 years, it can be a doubler also. So, averaging is not something I like. You can do a SIP if you want. So that you get a better price over a period of time. So 3 months averaging is safer in stocks like Tata Power because immediately I don't see any rally. But over a period of time, the way they are doing business, I think it is going to be a re-rating stock.
Right, coming to you again, Mr. Prabhakar, Dr. Bhatia is writing to us. He's asking between Sequence Science and Nippon Life. Both he's bought at 300. He's asking where to switch to cover losses.
I think, the way AMC companies are growing, if you see the last 20 years data, they are growing at 21% CAGR. So that means, in next 4 years, the AUM, the overall mutual fund AUM is at 39 lakh crore. So it should double. So every company will do very good in AMC space. But, maybe due to few reasons, AMC as a sector has not performed. That is why Nippon AMC has not performed. So I think there is nothing to worry if you are a long-term investor. Sequent Scientific we don't track, but whatever I am seeing, we need to move on to something different. We talked about QSR when we started. I think Jubilant Food is one where you can recover those losses. Or Indian Hotel, Mr. Puneet Chatwal was there in your channel. And the way he spoke, it is going to be a re-rating for Indian hotel companies. Let it be Indian hotel or other hotel stocks. That is where I think 50-60% rally is still pending in the next 2-3 years. So investing in QSR or hotel is going to be something where you can recover those money.
Right. Let me get on board this query that's coming in from Sunil G. He's writing to us from Muscat. He has 2 queries, but sorry, Sunil, we'll only be taking one of your query. HDFC Life, do you think that it's a good price to enter right now for the longer term, Kunal?
Well, I would suggest, I think a better alternative would be SBI Life. I think that stock is looking extremely strong. So I think in the last 3-4 months, the markets have started to demarcate or have a separate liking towards SBI Life as compared to HDFC Life. So the 3 key stocks which we typically discuss from the insurance space, SBI Life has been a class outperformer. ICICI Pru somehow has been a moderate kind of a performer, but HDFC Life has been an underperformer. And this trend for HDFC Life seems to be sustaining for a short to medium term play. So I believe possibly for the next 3 months or 6 months, the stock can remain an underperformer. So if you're looking to park money into the insurance pack, I would suggest SBI Life as a better alternative, at least as of now.
Right. Satya CK is writing, Kunal. He's asking about Poly Medicure. He's asking for mid-term prospects on this stock.
Poly Medicure, I don't track the stock.
Mr. Prabhakar, what about you? Poly Medicure.
I also don't track this stuff.
Right, we can take another question. Rajesh Maheshwari is writing to us. He's asking from Indore, his query is on Tata Elxsi. He's asking for the right time to invest in the stock, which is trading around 8200 to 8300 level. What should be his entry level? Kunal, will you take this?
Yeah, so I do track Tata Elxsi, but I don't think that it's the right time to invest into the stock. I think it's going through some very strong structural changes for itself. It's managed to break, initially the stock was at 10,000 plus in the month of August, but then the correction which has happened from those 10,000 levels seems to be very sharp for the stock price. So I would probably suggest not to buy the stock at current levels. A better alternative, if you're looking from the overall IT pack, would of course be stocks like Infosys and TCS, which have been correcting, I think, 40% from their previous major highs, and I think are at very attractive levels.
All right, this next one is coming from Chandan Jain. He's writing to us from Hubli, Karnataka, and he's asking, as the market is in a downtrend, should he look to book profit in banks like SBI, ICICI Bank and Federal Bank? Do you think it's the right strategy right now, Kunal?
So it depends. I mean, if your time frame is 6 months, 1 year, then I don't think you should probably try and budge from these kind of names. ICICI Bank, SBI, Federal Bank. If you can probably add maybe an IndusInd Bank or IDFC First Bank, those are classical stocks which could do exceptionally well. So it's a phase. It's a bumpy ride right now for these banking names, given the kind of rise in the bond yields, etc., which you've seen over the last few days. Maybe that could probably last for another week or so. But once that selling is over and done with, I believe that the banking stocks can make a strong comeback. So it depends on your time horizon. If you can stick from a medium term to long term play, I would suggest a hold.
Right, the query segment is definitely not over, but we are slipping into a short break. Don't go anywhere. We'll be right back.
Dalmia, only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी.
Once a trader, always a trader.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market right here in 80 now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that way. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long term perspective, I think we should still.
Welcome back to Buy Now, Sell Now on ET Now. We continue with the query segment where we left it off. Jolly James is writing to us. He's asking whether he can average LIC at this point in time. His entry price was 845.
Kunal, I believe.
Right, Kunal.
So I would believe that you can you can continue to hold on to the stock now, even though the stock has been going through a sharp, consistent selling pressure. But I would still believe that possibly there could be a wave of rally now, because the chart history is very limited. Won't be able to predict or forecast on a more longer term basis. But from a short term play, I think it looks attractive, and you can continue to hold on.
Okay, this one is coming from R.S. Sarma. He's writing to us from Hyderabad, and I will take this one to you, Mr. Prabhakar, because I believe Kunal won't be able to answer this one because it's recently listed counter, and that is on card trade. He wants to know what's the prospects on this particular counter because it is down about 60% from the IPO price. And with the auto market now actually booming, do you see some sort of a recovery in card trade? Does it make sense to stay invested in this one?
Yeah, car trade is a new listed entity, and if you see after listing, regularly they have been making losses, and the revenue growth is not very attractive, but data is very small, because it is hardly 1-2 years. So we need to watch out more. But car buying, selling is more regionalized. So whether your online platform will serve the purpose, I have my own doubts, because whatever I've seen, it is more based on regional requirements and regional needs, where you need to have a physical presence more than the online presence. So I at this point of time, I would avoid car trade. There are better platform companies, which can do very good. We like Naukri in that space. Even Matrimony is far better. So but car trade is Till now, it has been reporting losses, and the revenue growth is not up to the mark. Anything which is online has to grow at 25% to justify this valuation.
Right, Kunal, this one's for you. Jayakrishna Kapali is writing to us from Kerala. He has Ashok Leland at 167. He's asking what he should do, hold or exit. And he's also saying if he exits, please suggest a stock to enter at current level for a medium term.
See, I think a better alternative for Ashok Leland would of course be M&M, Mahindra & Mahindra. So always look at it this way, that when a sector moves up or starts to get into a big breakout trend, always try and identify the leaders. Now M&M and TVS Motors were the first two stocks which managed to move up higher. The beta nature, the price trends, the breakouts for these stocks are far more stronger and sustainable as compared to Ashok Leland. So if you're asking me for a better alternative, I would of course anytime suggest a stock like M&M. And if you're looking to add to maybe another large cap name, then I think Maruti also looks to be forming a very similar kind of a breakout. Now I think it's just around that 9,000 mark or sub 9,000 levels for itself. So the risk reward as well as the price levels are very attractive for Maruti as well.
All right, this one's from Akbar Shah, and he's holding about 15 shares of DCM Shriram Kunal, and he's purchased it at a price of around 335 rupees per share. Now he wants to know whether he should continue to stay put with this holding or sell or look to invest in some other stock altogether.
See, I would suggest to hold on. Now for the last, I think 4-5 quarters, the stock has not done much. It's trading around this 1,000-1,200 range. That's been a big broad range. So it's trying to absorb, or go through a phase of consolidation, trying to absorb most of the churn in terms of stock as well as the overall market. I think that's a good sign for stock prices when they try and mature into a higher trading range for themselves. I would suggest a hold on DCM Shriram.
Right, Rahul is writing to us from Mumbai. He's asking what an ideal time rate would be to buy GPPB. Kunal, will you take this?
Can you repeat the name of the stock?
GPPB, it will be Gujarat Pipavav Port Limited.
I don't track the stock.
What about you, Mr. Prabhakar?
We also don't track this stock.
Right. Okay, I'll take another question. Abhishek Mehta is writing to us. He's holding HDFC. He's asking which other bank should he invest in to add for his portfolio for a long term. Mr. Prabhakar?
I think ICICI Bank, where the growth is very good, is something we like. Even Federal Bank and City Union Bank, if you are looking for a smaller sized bank, then I think Federal Bank and City Union Bank are two other banks which we like, where we think good growth is also possible.
All right, before we move ahead with the next query, let's just take a note of what the markets are doing currently. And looks like it was a good choice for you to wear red color tie, Adaraj, given the fact that the markets are actually recovering. And right now we are nudging towards the positive territory for the Nifty. A very, very smart recovery coming in for the markets, given the fact that we opened for trade with the gap down. Some of the counters that are recovering from the day's lowest point, as you can see on the bottom of the screen, one of them is Titan, that has seen a smart recovery of about 2% from the day's lowest point. Take a look at what Nifty Bank also is doing currently, and the broader markets. They are already in the positive territory, both mid-cap as well as the small-cap index. Both of them are trading with a smart positive bias at this point in time. 0.3% uptick coming in for the mid-cap, and about 0.1% coming in for the small cap index. So good and smart recovery coming in for the benchmark. So let me get going with the next query then. And this one is coming in from one of our viewers who's written to us, Sushil, that is. Written to us on Supriya Life Sciences. Wants a technical view on this one, Kunal, but I'm very doubtful you'll have one. He has about 700 shares purchased at 362 rupees per share.
Well, yeah, the price data and the history is a bit limited, but then, over the last, I think, 5-6 months or so, 8-9 months of the listing of the stock price, it's been going through a consistent kind of a downtrend. So purely on the basis of charts, it doesn't look attractive. But the only catch over here for Supriya Life Science, when I look at the charts, is that the indicators have come back into a deep oversold territory on the daily time frame, which means we are nearing a potential bottom for the stock price. So if you've already bought at higher levels, I would suggest to wait out. Possibly for the next 1 to 2 months, let the stock get into a bottom formation process, then start to show a phase of a rally as well as an uptrend. And if you're looking to buy the stock, then I would suggest wait out for a point when the stock breaks past about the 50-day moving average, which is at 350 levels for Supriya Life Science.
Right. Avirath Nagul is writing to us, and he's asking which sugar stock he should invest in for a short-term basis. Kunal, this one's for you.
So I think you can look at for either EID Parry, that's a more performing stock, Or else if you're looking to buy a more formidable name from the sugar pack, Balrampur Chini is what I would recommend. Now both these stocks are trading at different price points in the sense relative to their respective 200-day moving averages. EID parity is almost 10-12% higher than the 200 DMA for itself. Balrampur Chini on the other hand, I think the stock is down 10% or 15% from its previous from its 200-day moving average. So they are positioned in a different way, but I think both these stocks to me look very attractive from the sugar pack.
Right. This next query that I have is coming in from Aarti, and she's looking to invest some amount for the longer term. And she wants to know whether it makes sense to look at some of the IT, cement and mid-cap FMCG names. And if yes, then which of those counters that she can look at investing in for the longer term right now, Mr. Prabhakar?
IT names, I think, KPIT Tech, LTI. You can look at other stocks also. And Dabur, Marico in FMCG looks very good. So no, I think whatever correction happening, we might not correct more than 10-15%. So you have to look at accumulating stock in a systematic manner for a long term. So I don't think you should be too worried. If the company is growing at 10 to 12% itself CAGR, then you have to slowly start investing.
Right. Richa is writing to us and she's asking when she can buy ITC. She exited on profit and wants to enter again. Kunal?
I think current levels is a good time to buy ITC back again. I think it's a stock which has done reasonably well over the last 8 to 9 months. And I would believe that it should continue to do pretty well, at least for the remainder of 2022 as well as the start of the next year as well. So I would continue to suggest ITC at current levels.
Okay, this one is from Professor Thomas V. George. He's writing to us from Kochi. Apologies, Professor Thomas, for not answering your queries earlier. But this one is for you, Mr. Prabhakar. He wants to know about CDSL, CAMS, BSC and IEX. Amongst these four, which one is the better name to invest in for the longer term?
I think at current levels, CAMS looks very good. So that is one thing we can look at.
Right. Indumati is writing to us. This question is specifically for Kunal. Post this correction, which sector is expected to take leadership? Which stock from that sector are suggested by you? Kunal?
It's a tough one because it's a lot of forecasting which I have to do. But then if I have to anticipate that which sectors could lead the breakout, I would still believe that banking, financials, would be the ones which could lead the breakout. These, stocks and these sectors have gone through a sharp correction for themselves. But I believe somewhere down the line that these stocks would try and bottom out. The selling pressure should abate for these names, and you could see a decent recovery from, from maybe current levels or possibly another 5% down from current levels for these, banking names. So stick with large cap names. Many preferred stocks which I've been highlighting time and again, the likes of IndusInd Bank, IDFC First Bank are two preferred picks from my side. And if you're looking at for larger cap names, then I think ICICI Bank at 840, 850 also looks very attractive.
Okay, this one is coming from Sadashiv Kamath, and he's talking about Motilal Oswal. He's purchased 300 shares at a price of 750 rupees per share. He wants to know how does this counter look over the longer term. Mr. Prabhakar, do you tag this one?
Yeah, no, I think their business model is fantastic. They are in broking, they are in housing finance, they are in other finances also, and they have a mutual fund. So I think this is something which will grow over a period of time. So I think you can hold on to it.
Right. Tansen Pakrasia is writing to us from Kochi. He's asking for your view on UMA Exports holding as 560 shares. 560 shares at 78. Mr. Prabhakar?
What is the share?
He's holding 560 shares at 78. The stock is UMA Exports.
No,
Kunal, do you track
I've never seen this stock.
No, I don't track the stock.
Okay, we can take another question. Shrikant Sundar is writing to us and asking for an outlook on Tejas Networks in the current market context. Kunal?
Yeah, I think it's a good stock. The stock had done pretty well, somewhere I think in the last from the 2020 lows, gone through a sideways price action in 2021, major part of the previous year, and now it's come back into a breakout mode back again. So I think at 670, 671, you can look to buy the stock, but then have a strategy where you can look to buy on a correction as well. So you can look to average on correction as well. Maybe a 10% correction or a 15% correction could be a point where you can look to average further.
All right. With that, let's kickstart with the rapid fire then. And this one is coming in from Santosh Vaidya. He's writing to us from Dubai. He's asking for PNB. He has about 3,600 shares purchased at 46 rupees per share. He's been holding on to it for the next 2 years. Do you think that it makes sense to continue to hold on to it, Kunal?
I would suggest a shift and shift towards Bank of Baroda or Canara Bank.
Right. Richard has asked a very direct question. Is Starsons a good buy? Mr. Prabhakar?
Starsons, yes, and long-term growth is good.
Okay, Sandeepan is asking about TN Petro. Wants a fundamental view. Good one for the longer term. Mr. Prabhakar?
No, I would shift to some other stock. TN Petro, I will not hold.
Right, Kunal. Shobna Iyer is writing to us. What's a better buy for long term between Bajaj Finserv and Bajaj Finance?
Both of them are, quite strong. I would suggest either of them.
Okay, Dr. Sagar has written to us from Bhubaneswar. Sale 1,270 shares at 90 rupees. What to do, Kunal?
I would suggest to average closer to 65 mark.
Right. Nikhila Reddy is writing to us. What are the 3 bank stocks you would recommend for a 3-year period? Mr. Prabhakar?
Bank of Baroda, ICICI Bank and Federal Bank.
Okay, Christopher is writing to us from Goa. A technical view on Dr. Lal Path Labs. He's purchased it at 3,860 rupees per share for the 6 months. How does it look?
I think good time to average. Maybe not at current levels, but possibly another 100 points on the downside.
Right. Kunal Mohit Sharma is writing to us. He wants to buy ONGC and IEX at current price. He's asking whether it's a good idea or not.
I would suggest not.
All right, this next one is coming in from Senthil Nathan, writing to us from Chennai. Mr. Prabhakar, Tamil Nadu Mercantile Bank is what he had got it at the IPO. What should he do?
It is a new listing, so let us wait for 1 year to know the data. Now I cannot come.
Right, Kunal Mayank is writing to us. Bought HDFC Bank at 1400. Please provide guidance for short term, 3 to 6 months time horizon.
Well, I would suggest to hold on to the stock even from current levels.
All right, let me just take this last one that I have. The 100 shares of Canterville purchased at 1,504 rupees per share. This one is from Mr. Jayakishan from Gwalior. He's saying he's incurring heavy losses. Kunal, what's your take on this one?
Well, I would suggest to hold on. As of now, I think the stock had done exceptionally well over a long-term period. Right now, the stock is going through a correction, but you can continue to hold on.
All right, and now with that, we come to the end of the Rapid Fire as well as Query segment. Thank you so much, Kunal, as well as Mr. Prabhakar for joining us on the show, giving the viewers your take on the QSR space as well as resolving queries. And with that, we will slip into a break on this edition of Buy Now, Sell Now. Viewers, if we have not answered your queries, don't be disheartened. We'll be back tomorrow at 11 a.m. But for now, we are slipping into break on this edition of Buy Now, Sell Now.
आग को फैलने से रोकना what you find even from Europe.
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch markets at noon every trading day only on ET Now.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
All right, and here we are with that big launch that we were awaiting, and Tata Motors has indeed launched its new electric vehicle, the Tiago EV in India. The car has been touted to be India's most affordable EV yet. If you look at the price band that is just being released right now, is the fact that the price will be ranging from 8.49 lakh rupees to 11.79 lakh rupees. So it is indeed the sub 10 lakh mark. Remember that Tata Motors had announced the EV variant of the hatchback on World EV Day. And as per reports, we are going to wait for some more details coming from the management. But what reports have suggested that the new Tiago EV will come equipped with new features. Also, is expected to offer more than 300 kilometers of driving range on a single charge. And with this launch, Tata Tiago becomes the first premium hatchback to be offered as an EV in India. And Tata Tiago EV will join Tata's electric fleet that is comprising of Nexon EV, Tigor EV, Nexon EV Max and Nexon EV Prime. So that is the car that everyone's been waiting for. That is Tiago, the EV variant, and the price that is range is between 8.49 lakh to 11.79 lakh. So that is the big Tata's electric push, and that is Tiago EV launch for you. But let's move on. And we will get you some more details on that big car launch. But Does India have a case for a rating upgrade? And when will the credit rating agencies take cognizance of the turmoil in the West and the resilience in India? My colleague Anisha Jain is here to explain the context for us and tell us what exactly and how exactly is India looking.
Well, yes, the key question that we're asking today is whether there is a case to be made for UK and the other European economies to get derated while India to get re-rated.